there are three things that you need to start. One is regulatory approval, one is capacity, and one is fundraising. A lot of it's networking. I mean, you can do your own research and get the list of people and you can approach them, but actually to having an introduction through someone who's sort of well known or has an existing relationship there is key. We believe that people in these areas, good drivers, responsible drivers in these areas, are being overpriced. It's those irresponsible drivers that cause the accidents. It's the mobile phone use, it's the braking, hard braking, that the aggressive driving behaviour, that's what causes most of the accidents. And so we're trying to eliminate people that are driving like that from our risk pool.
What are the true hidden complexities and benefits needed by a modern motor insurance telematics startup? Today we're going to answer that in the Fintech OS Evolve Insurance podcast. I'm really happy to be joined with Yvette, the CEO and founder of Magellan. And Yvette, it's lovely to have you here.
Thanks for inviting me. Thank
you. So, just before we kick off, let's just set the scene. So, look, in previous podcasts, we've talked about simplification, we've talked about transformation, we've talked about fraud, we've talked about claims, we've talked about initiatives that a lot of established MGAs, full stack insurers, NARs that they've been doing this for a long, long time. They've got people, they've got processes, right? But with a new startup like yourself, it's going to be interesting to hear how you start dealing with these capabilities and what's really, really important to you on your journey going forward. But what I have noticed and what I have been reading, for any startup, there is a 90% failure rate. And of that 90%, 10% fail in the first year, followed by another 50% over the next 5 years. So what I'd love to explore is, obviously we do not want you going down this route. So what I'd love to explore is the themes and topics that a startup like yourself is thinking about and how you overcome, given that you've got the experience on how to do this.
Okay. So there are three things that you need to start. One is regulatory approval, one is capacity, and one is fundraising. And you can't launch without any of the three. So they're the three critical bits that you need to bring together. Regulatory is, this is not my first startup gig. The last time we did this, regulatory approval, it takes a long time. It's really hard. But this time we've decided to actually go down the AR route. We're going to be an AR of an incubator. The reason for that is that they literally support the AR to launch, from AR all the way through down to directly authorised.
So just tell me the difference between the AR, the broker, the MJ, and the full stack, just for our listeners, so we're fully aware.
So the full stack is the insurer. The broker is obviously just doing the broking.
Yep.
The MGA is the managing general agent, so you're selling insurance policies on behalf of the insurer.
When I look at this, given that I have been doing insurance a long, long time, but not as a startup, so the first thing that sort of scares me about this is, look, I know there's hurdles you've got to get through with funding, and we're going to talk about all this in a minute, but the big thing I would be nervous of as a startup is dealing with the regulators, whether I was an appointed rep, a broker, MJ. Now, obviously, I understand the full stack requires much more regulation, but are you still going to be under regulator approval? Do you still need to do some work for the regulator?
Yeah, we still need to be FCA approved. So before we did this, you have to have your approved people, you have to have your processes, you have to have your technology, you have to have your funding, you have to have your capacity. It all needs to be in place. The AR route is slightly simplified. You don't need as much capital to get going.
Right.
You can piggyback off your incubator for some of the processes, especially on the regulatory and compliance side, but you still need to be, very prepared and solvent from day one.
Okay. And what about, so there's some common themes that we're talking about here, you've already mentioned. So we're looking at, so if you've got to have these 4 or 5 initiatives in place, it could be tech, it could be people, how do you get capacity, given that you're not going to be paying out the claims.
Mm-hmm.
So you need someone that's going to support you in starting up this company from a claims point of view. And again, we can talk about potential volumes of gross written premium that you expect to do, and that will drive effectively the claims income that's going to come through. So how does capacity work, and what is capacity?
So as an MGA, you're essentially writing insurance policies on behalf of the insurer, and you have to agree the terms that they're happy for you to write those policies. So it's in terms of volume. They will set a boundary in terms of you can't write more than this, or we want you to write up to that level. They have their own targets to meet. But you've got to agree the rules that you're going to set. So for us, for example, we're going to be insuring safe drivers in really challenging areas.
Okay.
So we have to make sure that our capacity provider is happy with us going into those areas. And the way to do that is to make sure that we're selecting the right types of risk, we're underwriting properly, and we've actually asked for delegated authority. So we're going to be doing pricing, underwriting, and claims.
Right.
And we need to make sure that our capacity provider is happy with us
And
doing
Yvette,
that.
do you have to? If you're going to be, again, we'll talk about the telematics capability later. But if you're going to be identifying your customers, your drivers based on risk, do you, before you get capacity, will the capacity provider want to see what segments you're writing in?
Yes.
And the volumes, your scale? So they'll say, look, I want you to do 5,000 in year one, 20,000. So do they determine your growth pattern? Is that what they're looking at?
Yeah, yes and no. I mean, they've got their, they tell us what they want us to. We're having, discussions with the capacity provider at the moment. The regulator, it's quite an interesting sort of little dance that you do, because the regulator wants you to start do a very soft launch, make sure everything's working, keep everything very small and controlled. The capacity provider wants you to do a little bit more than that, because they've got their own targets and the reinsurance costs that go with that. And then you've got your investors that want you to go hell for leather, because they want a return on investment. So you end up doing a little balancing act, making sure that you're trying to keep everyone happy. You can't go too quickly. The regulator won't allow it. You shouldn't. You need to make sure everything's working. So the way to do it is a really soft launch initially, but then have the ability to ramp up to make sure that your capacity provider is happy.
So how do you physically get capacity? Is it capacity meetings? Is it just networks? How do you actually get physical to have that conversation with a capacity provider? How does it start to say, look, I'm a new startup insurer. I'm going to be doing motor. It's going to be for safe drivers, telematics device. How do you get their meetings? How does that happen?
A lot of it's networking. I mean, you can do your own research and get the list of people, and you can approach them. But actually, to having an introduction through someone who's well known, or has an existing relationship there is key. So part of the reason that we've chosen the incubator that we're going to use is that they've got very good relationships with capacity providers, and it's that group that have actually introduced us. So they get to know your business, they understand your business, they understand why you want to write that type of risk and the volumes and the reasons why, and then they pitch it on your behalf, and then they do the intro, and then you follow up and have the conversations with the capacity providers.
So good that you can have conversation with capacity providers.
Yes.
Good that the capacity providers and the regulators, and we're doing this dance to make sure everyone's happy with it. But how to do all of this, to get your company up and running, to prove to everyone, you've got to get some money.
Yes.
Right. So I presume this is, am I right in saying, is this the hardest part, is getting the funding? How do you convince people to invest in this startup?
Okay. So I think the three come together. So you've got to have your regulatory approval, but an investor's going to want to know that there's at least sight of regulatory approval. Otherwise, you may never launch. And you've got to have capacity to launch. So the capacity provider, you cannot launch without capacity. And so you need to at least make sure that you've got a term sheet or something in place to make sure that the investor's happy that this thing is going to go somewhere. What we did is we had some people that came in at the very, very start. They understood insurance. They understood what we were trying to do. And they knew us, actually. So they invested, I think, in the team rather than the concept at that stage. You then go out to other groups, whether that's ultra high net worth individuals, family offices, or whether it's the VC community. But it's really key, I think, to have someone, an investor who understands insurance.
Okay.
Because the problem you're going to have raising capital, it's great. We're launching a new insurance company. We're going to make motor insurance more affordable in really challenging areas. So these people are being charged like 3 or 4 times more than they should be charged, just because of unsociable driving or fraud risk in the area where they live. And so the way that we're doing it, it's new. We're using, cutting edge technology to improve processes, reduce our costs that we can actually put back onto the consumer to make their premiums come down. So that's all very exciting. But you need an investor really that understands insurance, because we all know that, as you say, a lot of startups just don't actually get through the first 3 years. First year, it's all about, so you need a lot of money to launch. And you can't launch without it. The regulator, you have to make sure that you've got.
And Yvette, what's this? So, what's this money actually for? Is it just to get people on board? Is it to, because you've already said you've got to have tech to show you've got to show somebody. So I presume it's people, tech, and I presume it's an AR. You're going to be paying fees or some type of commission. So is all of this in one big hit, or are the investors saying, look, I'm going to fund you at stage 1 to get your tech up, and I'm going to fund you at stage 2, given that you've proven yourself? How does that funding, how is it spent?
Okay, so the seed funding that came in initially was literally just sort of working capital to get us up and running through the regulatory process. The next bit, you actually need all of it. And this is the difference. So it's really difficult trying to raise money as a startup, but especially trying to raise money pre-revenue, which you need to do as an insurer, because you need the funds there before you can actually launch. And so that's why it's really key to make sure that you have someone who understands insurance as an investor. So the way that it works, you know how many premiums you're going to be writing year 1.
Yep.
In year 2, your volumes need to increase. You need to show growth. But your commission from year 1 doesn't hit until year 3. And so you're going to have all the tech costs up in year 1. Year 2, you're probably going to break even, and you're not going to be profitable until year 3. And in doing that, you need to make sure that you've got this slow approach to it. Everything's working, and it's very, very cautious approach to make sure that you've got it right.
So does that mean from day 1, because this is I'm quite interested in this. Does that mean from day 1 that you're going to carefully select your risk profile?
Yes.
Right. And how do you think you're going to do that at the moment? Because I presume you've got no claims experience.
Nope.
You've got no data, but we all know you can acquire data.
Yes.
through certain suppliers. And then I presume once you've got that data, are you going to produce some type of risk profile that's a low risk, and you're going to go, these are the people that we're going to get on board first?
Yes.
Right.
So we have the Magellan Lite app that we ask our customers to download.
All right.
So this is before they go on risk. So the way that we're actually launching Magellan is we're going on a city-by-city approach. We've identified our launch city. We're working with the local community, the local businesses, the councils.
Yeah.
They are introducing us to the people with the right type of profile that we're looking for. We ask them to download the app. Our chief underwriting officer will look at the driving behaviour to make sure that they're the right type of risk profile for us. We're not going for the young drivers. We're not going for the high rate, the really expensive cars. We're going for the very boring risk. So we're underwriting good risk in challenging areas is what we're doing.
And that's is that I forget what the term is. It try before you buy type capability where they're going to look at it and you're going to make your assessment, and then once you're happy with them, you can offer them a decent price.
Yeah.
And are you convinced that in these challenging areas that price will be a good price? Is that how it's going to be
Yes.
positioned first of all?
Yeah, I think so. So we believe that people in these areas, good drivers, responsible drivers in these areas, are being overpriced.
Yeah.
So we know that we can actually offer them more affordable insurance, providing that their driving behaviour is within a certain score. So what we're doing is we're looking at their driving behaviour before we put them on risk.
Right.
We're selecting the right types of driver
Yeah.
that we want to make sure that we've got the right risk pool,
Mm-hmm.
and then we actually have a risk pool management as well. So active risk pool management. So once the driver is on risk, we have a telematics device that goes into the car. It means we can continue monitoring their driving behaviour. If at that stage they start to drive like an idiot, we have the ability to take them off risk.
Yes.
So we have a 3-strike rule, so
Yeah,
they
yeah.
can take them off. But equally, what we're trying to do is it's that long tail risk. It's it's those irresponsible drivers that cause the accidents. It's the mobile phone use. It's the braking, hard braking, that the aggressive driving behaviour. That's what causes most of the accidents. And so we're trying to eliminate people that are driving like that from our risk pool.
And what about the obvious thing that comes to mind is the fraud implications? Because I mean, with an app or an app only or a device or a tag, I presume, but are you trying to mitigate that even before you try before you buy, or do you think that, because what I would hope is if an individual has a driving profile and then all of a sudden when they come on risk, that profile changes, then you can see that something...
The game in the system.
Yeah, the game in the system, right. So you'll have that in place, will you?
Yes.
Yeah.
So we're going through the affinity group route and sort of trying to select the right types of drivers. Someone who's being introduced to us by their employer or whatever that might be, community leader, are much less likely to do something stupid because it'll impact other parts of their lives. So we're trying to mitigate that risk, selecting the right types of drivers initially. So it's about selecting, and then it's about the active risk pool management, making sure that if they do start to drive like an idiot, we can take them off risk. We don't actually think that that's going to happen very much. If it does, it might. But it also means that, if there is an accident, if there's an event, we have the telematics device in the car. So we can see there's been an event. We can do the FNOL, the first notification of loss. We can see how severe we think that event is, and whether it's worth us making an outbound call. But it also means that we can reconstruct the event with crash data, and we can fight fraudulent claims.
So this sounds really, really good. Yeah, no, I get it. It sounds a little bit expensive. How is it? Are people helping you with, just initially that you're a startup, just with the capturing of data, the analytics around data? Because I mean, you can't spend all the investment, because this could all just go on super duper tech if you wanted it to. So I mean, are the different partners involved all trying to support you in what they can?
It's really interesting, actually. As a startup, I think people are really behind us, and people who know us and know the team, we've got an amazing team of people who've been got decades of insurance experience, and I think it's those relationships that have actually helped us with some of these partner relationships. And people, I think, want to see a new motor insurer come to the market. They're really supportive. Obviously, there'll be costs further down the line to compensate for it. Everyone's trying to make a living. Yeah. But we've had a lot of support, and people want to help. And so we've been quite lucky.
So capacity is in place.
Yep.
Funding's in place. We can talk about technology a little bit more in a minute, because it's certainly my area. But acquisition costs, as you know, for an is high. Is this... You've already mentioned that you could get support from the local areas, but is this going to be direct, or is it going to be aggregator driven? How are you going to get them initial X number of thousand, if it is X number of thousand policyholders in? How's it going to work?
It could be a little bit of both. I mean, we're going direct to consumer, so we are looking to go through the community to community basis and do city by city launch. Because we think that that's the best way to select the right types of risk. And these areas are really challenging. So, they're underserved in terms of insurance. People can't get affordable motor insurance there. So we need to make sure that we're sort of really into the community to make sure we're selecting the right type of risk. But, we also have targets that we need to meet. So it could be that we do go on the aggregators. Customer acquisition costs on the aggregators are like £70-80 per customer. As an MGA, that's expensive. And so you have to make sure that, so your marketing costs to go into city by city are arguably less than it is going on the aggregators. And you have the ability to select the right types of risk.
And what about, so And the whole aspect of retention, how is that going to work? Are you during the policy term, you're constantly just like, telematics has been around for a long time. I mean, I know my early days I was doing it with Aviva and Pace Your Drive, and it was slightly different in those days. But I presume you are going to start incentivizing customers during the policy term. So what type of things could you? Is it offer based? Is it just reducing premium costs on a monthly basis, or is it a mixture of all of those?
It's a mixture of both. So obviously more affordable motor insurance initially to get them on risk, but the types of drivers that we want to stay in our risk pool, we're going to make we want to be as sticky as possible. We want them to stay with us. And so rewarding drivers for responsible driving behaviour is going to be really key. We've got a partner that we're looking to work with that will offer a reward system. And it's not just about, your drive score and driving, I've got an 80 drive score, so I'm going to get these rewards. It could be, we've had conversations with one of the local councils. They've got a lot of data in terms of where the hotspots are in terms of the roads within their city. Mm-hmm. And so, there's a school, kids are coming out of school and looking at their mobile phones, they're walking in front of cars. If our drivers will just avoid that area between 3 or 4 o'clock in the afternoon, it might take them 2 minutes longer, but that's responsible driving behaviour, and we can reward them for that. Mm-hmm, mm-hmm. So it's all kinds of different things like that. There's another group area that we're aware of that is a hotspot for antisocial driving behaviour. That's where a lot of the problems are happening. It doesn't mean we're not going to underwrite risk in those areas, but if you can avoid the area where we think that that's happening, then that's responsible driving behaviour.
And in Yvette, does the type of device support? Because I know we can talk about monitoring and we can talk about claims as well, because I presume, your capacity provider, and if you're going to do claims yourself or use a TPA, everything wants to keep the cost down.
Yes.
And, I love all the technologies, but I still haven't seen insurers, full stack capacities, TPAs, making the best use of this data for claims perspective. They'll use it for driving to reduce costs, but if it's a ODB device or something that's attached to the battery that's going to give you high-end data, I still haven't seen them. And I'm sure our listeners, when this goes out, people go, no, of course we're using it, but I still haven't seen that effective data, because you can get so much information at FNOL, and we all know that golden hour in claims is the time that you make the best decision, but you need the data to support it. Yeah. So are you looking to work with that data and maybe work with your partners or your TPAs or whatever you're going to do? What's your thoughts on that?
I think you're right. I think a lot of telematics providers are not using that data. Insurers are not using that data. You're absolutely right. We've chosen a partner that we're going to be working with who are using that data, and they're sharing that data with us. So as a startup, data's key. We don't have our own data, so we need to use their data. But we are looking to actually bring that in-house and develop it to make sure that we have better outcomes.
So that brings me nicely on to my favourite topic, which I could spend the rest of the podcast talking about, is technology.
Okay.
Right. So what do you feel is going to be your most important first step with technology? Or is it developing the app? Is it the quote to bind capability? Is it the analytics around the drive scores? Where's that going to be hosted? So, because you're gonna need some. I'm not going to say you have to have a fortune to do this, but you're going to need some money and you're going to need help to get this started. Because as we know, everyone and I was on a podcast, a couple of weeks ago talking about fraud, and it was all AI, and everyone's doing AI. So I mean, AI can be quite expensive, especially if you start using the hyperscalers and whatever data you're going to use. So have you got an order in which you feel, with your initial funding, where do you want to put your best bets? What do you really need in order to launch?
So obviously we need the app, and it's we're asking people to download the app before they become on risk. So we need to make sure that is as cheap as possible. And whether we develop our own app, Magellan Lite, or whether we actually take something off the shelf, but policy admin system is obviously really important. We need to make sure that what we don't want is to sort of build another sort of legacy insurer where you have different systems working, alongside.
But that's going to be
each
one
other.
of your strengths. You haven't got that baggage.
We haven't.
And believe me, there's a lot of people out there that are struggling at the moment,
Yes.
moving from legacy systems into low code, no code like Fintech OS. So we're seeing that every day. So you're not going to have that.
Yeah, and that's really key, actually. So, it's very easy just to go and do the same thing again and buy, the technology off the shelf. It's cheap and cheerful. We know it works. Other people are using it. But if you're trying to do something differently, you're trying to do something that, as an insurtech, you need to use cutting edge technology. So you need to start looking at new types of technology, new types of businesses that are actually providing this stuff. And to be clear with you, one of the reasons that we looked at Fintech OS was actually speed to market.
Yeah,
and the fact that you can just bespoke something for us. That we can use, and it's pretty quick to deploy.
Yeah.
When you're trying to put your technology providers together, you have it's another dance. You have your funding coming in, and you can't press go until you know that you've got the funds to actually. You can't start something and stop it. It's not fair on anyone. So, you need to make sure that the funds are there to actually complete the project. But equally, by the time your funds are there, although you've been talking to your technology providers and you've chosen the ones that you want to work with, they're also running their own businesses. They're also working with other customers. So there might be a month, six weeks timeline before they can even start working on the project that you need to work with them on. And so I think you have to be really clear with them and communicate with them about sort of your timescales, when that funding is likely to come, what you want from them and the timelines, and then you sort of need to work backwards. And I think it's just that communication is really key to make sure that when you have the funding, when you're ready to go, you have all your technology providers working together, because there's no point having one part of the jigsaw puzzle and something else just being like 6 weeks delay.
Yvette, is there any chicken and egg here situation? Because I presume if you build your app, you negotiate your devices, whatever they may be, you get your quote to bind system up, you'll get your document management up and running with someone like us, blah, blah, blah. You've got it all sitting them. Does this all have to be in a fit state before the regulator says you're good to go? Or is it a conversation that the capacity provider will have the regulator say, look, it's on our terms. You don't need to worry. Or do you actually have to have everything ready?
You have to, yeah.
So you're going to have to invest. You're going to have to invest some money to get everything up, even before you launch. You're 100% sure you're going to get regulator approval to do this.
Yeah, I mean, you can get your FCA approval. As I say, you were working with an incubator. You can use some of their systems as well. Some of them have policy admin systems that you can use. You can piggyback off. That's not the way we're going to do it. But as an insurer, you need a lot of capital up front to launch, and this is where it goes. You're going to need your people, you're going to need your technology, you're going to need your solvency capital, you're going to need to be able to pay all the different fees that you have to pay, and so it is capital intensive. And I think this is why not many new motor insurance startups actually get past this for the first hurdle, because you need a backer. You need someone who's got deep pockets.
So you just mentioned something that I've picked up on, which is talent.
Yes.
Right. So, look, great having suppliers, partnerships, everyone's helping you, but where are you going to get the people, and what type of people do you need initially to launch? Have you got them? Are you thinking about them? Are they in the pipeline, or do you not need them yet?
So we will have a small team to launch. Again, it's all about capital and making sure that you've got a massive team that you need to fund to get launched. So we can probably launch in a skeleton team, but very quickly we're going to need to scale. And, my background is actually not insurance. My background is headhunting. So I'm all about people. I'm all about building the business. I'm all about building the culture and making sure that you've got the right people to do the right jobs. In my previous life as a headhunter, I probably would have got into the insurers. I'd have mapped the teams and sort of picked up the people I want. But again, as a new business, we don't really want to do that. We need different types of people coming into the business and different types of skill sets. And, we want to sort of bring up a new generation of people. Absolutely. And make it a really exciting business for people to work in. And that's what I'm really excited about. That's what I do. And I think that, it's important to get the right people. Of course, you need the insurance experience to launch. The team that we've got at the minute, it's a small team, but there's decades of experience there. But we also need to bring in different types of skill sets as well.
And I think definitely, I mean, I understand that to get launched, you might need, people like my age with grey hair that are putting on a few pounds. I understand that because that's where the experience is. But I presume, given that there is none of the legacy tech and it's all driven new AI stuff, that's going to attract some new younger talent that want to start. Because let's be honest, most people outside of our bubble think insurance is so boring, and it probably was many years ago. But definitely now that it's AI and analytics driven, a lot of the young people want to come into it, but they may not know it's there. So,
but you and I know that most people that you and I speak to in insurance never left school saying, I want to go into insurance. Everyone sort of just fell into it and stayed because it's actually quite an enjoyable sector to work in. So yes, it is definitely talking about bringing up the younger generation, new people into the business, making it exciting so people want to do it. And they look at it and they think, actually, I can make a difference there. That's what I want to do. And that's the type of company that I want to work in. And that excites me.
So regulator approval, capacity, funding, technology, acquisition of customers is good. Talent pool is good. We're bringing it all in. Right. Scale.
Yes.
How are you envisaging that's going to work? I mean, will you be getting pressure from the investors, and I presume the capacities are going to say, I want more and more policies coming through. Are you going to, how do you manage scale and the costs that go with the scale?
Yeah. So, our approach is going to be city by city. We will be a national brand. Our investors are obviously going to want us to go quicker. We'd like to be a full stack insurer. The group that we're working with is an AR that are going to incubate us through to us being directly authorised. We look at them as a long-term partner, and they will. We will start our application process for our full stack insurer probably by the end of year one. And we want us to get to scale pretty quickly, but it's very easy to get volume. You don't want the wrong type of volume. You don't want the wrong types of drivers just because you have to hit targets. We still want to be able to select the right types of drivers in these challenging areas. And so, yes, we want to scale, but we will do it the way that we know how to do it. And it's very much about that selection and underwriting.
Underwriting, which is key.
Yeah.
And Yvette, we're sort of coming a little bit to an end, but I've still got a couple of questions. So, given all of this, and given that you've been doing this for a few years now, what for other people listening, and again, please don't give any secrets away already, what do you feel you've learned from this? What are the key things that people should be looking for when developing a startup? Because Yvette, I'm not seeing many new insurers popping up every day in motor.
No.
I'm not. So I know it's hard. I understand it's complex. But given your wealth of experience now, what would be the 2-3 key bits of advice that you would say, if I was on this journey, this is what I've learned so far? What are they?
I would say keep it simple. Keep it as simple as you possibly can. I would also say don't be afraid to pivot. If you have embarked in you think that's the way you're going to go, and that's your business plan's written around it, and then something happens and it's clearly not working, change it, and change it quickly. You have to be flexible, but also you have to be communicating with lots of people. I think communication is key. So you have to communicate with the regulator, you have to communicate with your capacity provider and your investors. You have to make sure that you're communicating with your team so that everyone knows exactly where we are, and your technology providers. If something isn't going, a startup is never going to go in a straight line. There's always going to be bumps and twists and turns along the way. I think you have to be very honest and transparent, and you have to just keep that communication going. And I think if you do that, people think you're credible, they will support you. And just keep it simple.
And just one final thing. You don't have to answer this.
Okay.
When have you got an anticipated start date? When would you like when would you like to be, for your company to be in lights? When do you think? Have we got any ideas?
I think it'll be within the next 6 to 9 months.
6 to 9 months. That's great. Okay. So in them 6 to 9 months when it launches, right?
Yes.
I will make a promise to you that I will be your first customer.
You know I've seen your driving, right? No way.
Yvette,
joking.
you know,
I'm joking.
I know
I'm
you are.
joking.
I know. Yvette,
No,
it's
we'd love to have you as a first customer.
Like-
No, as a customer
As
in a
a-
pool, managing the risk.
yeah. Look, it's been a pleasure. It's been a pleasure talking to you. It sounds super exciting,
Thank
and
you.
it's an amazing journey. So I wish you all the success in this, and I'll look out for you.
Thank you.
Okay,
Appreciate it.
cheers. Thank you.